screen. Let me know if you guys can see my screen.
I can.
You can? I can see it? Cool. So, what we're going to discuss today, as far as harmonics is concerned, is first, I wanted to discuss the bat. Because the bat pattern is one of the easiest patterns to spot. Because you're looking for an M and or a W. Let me just go right here. You're always looking for this right here. And so, in order to really spot harmonics, you start viewing the market just like that, from that perspective. So you're always looking for a double top or double bottom, right? It seems easy enough, right? And once you understand and start viewing the market from this perspective, it becomes way more easy to spot harmonics or possible harmonics. So as I tell people when I first started learning it, and what my mentor had told me, forget about the candles, forget about what is happening in the market, what the candles mean, and is that an engulfing, whatever. It has nothing to do with that. It's all about seeing the market in the way that it moves. Like, you look at this right here, right? You know this is a downtrend, right? It's clear as day. But at the same time, how are you seeing it? See, what I'm looking at, this is what I see. I'm not looking at candles. All I see is that. Pretty much ABC, whatever. And from that perspective, all I do is start measuring out. What could this be? Let me take this off. I start measuring out. It went from relative high, and it went to low, and then all of a sudden it retraced back. Where did it retrace to? You see what I'm saying?
30.
And then it came down to this 414. Now, this is not a bet, what we're going to discuss today, but this is how I start looking at the market. And now it starts making higher lows. But see, I understand what a cipher looks like. A cipher goes from high to low. It comes to at least 382, and then it retraced down. It has to hit a 272, and then or 1414. It cannot close below that. It did not. So right now, it's this pattern is telling me that most likely it's going to become a cipher, which means I'm looking for a price to end up at the 786. It's going to keep rising into up here, and then I can sell. Or, being that this is the C point, I can buy from this level all the way up to the 786. But again, I digress because that is not a bet. But but the first thing that needs to be done is in understanding how to see them in such a fashion that you see it automatically, is that you're looking at the market from an impulsive structure. Matter of fact, I have this indicator. It's called the zigzag. You can put that on your chart as well, and actually
I've done that, yeah.
it measures it out for you. I changed one of the formats, so that way it gives me all of the actual little impulses as well. Because you have a format, I think the original way you have it, all you see is the major moves, one down, one up, down. So that would be one move right there. See, even though you have all of this in between, technically this is one move. This is what they call a complex pullback, but that's just really one down move, and then you have the up move. So again, and then you have the down move. This is what the market is doing right here, and all in between. So when you're looking at it from a harmonic standpoint, it's, you see what I'm saying? This is how I see the market. I'm looking at it all from the impulsive move, and then I just start measuring the moves out as to where it could possibly go. Especially if you're working. For me personally, you missed the trade, you didn't get in. Okay, well, where is it going, or how can I get in from that perspective? I have an impulsive move down here, then I have a retracement here, and then another impulsive move right down here. Which, as you can see, this is a W. And it hit its 886. This is a bat. This is my low, and I'll use this one here. This one's a little lower, but I'll use this one.
So a bat is kind of like a Head and Shoulders too.
It could be, but just always look for a double bottom or a double top. So if you understand, once you start looking from an impulsive standpoint, take this off, that the zigzags help you begin to see it automatically, because in the beginning you kind of saying, okay, we have here, you know, you have the minor impulsive moves and then you have the major ones, and you can see the market's playing out off of the major one. Now in between this is a weekly pattern. In between all of this is actually other harmonics. And so from the relative high to the relative low, we have a 786, right? It's actually, I'm sorry, it's not even a bat. Actually, it could be. His 886 and it has reversed. It's probably going to come down to a 382 and go back up. Because technically, as from a larger perspective, since your B point is a 786, your D point is going to be a 127. That is what they call a butterfly. But it's playing out from a bat's perspective as well. You could have caught all this coming down. And this is probably going to come down to like a 382 standpoint. And you'll see some kind of reversal, and it's going to complete this actual butterfly pattern. So you see inside this butterfly pattern is a bat, because technically what this is playing out, and you'll know what your patterns are based off of your B point. Always your B point is going to tell you what the harmonic is playing out, and this B point is a 786. But of course, what it has done, let me just change this color here, what it has also done, because a bat is either 382 or 50%, to be honest with you. Like I said, there's probably some type of smaller version. I don't even know why they cap them that way. Let me just take that off. Some type of smaller harmonic in there. But that's really where this is playing out. Depends on where you actually mark it off at. So what does a bat look like? A bat looks like you have an impulse leg down. We're going to do... let's see, a W. So you're going to do it from relative highs. This is your X. Impulse leg down to A. Your B point is going to be a 382 or a 50%. Your C point is going to be anything from a 382 to an 886. So usually what's going to happen is it's not going to break the low. It's not going to break the A point. If it breaks the A point, it's a different pattern. So whatever you're looking for, you're making sure it's not breaking the low. So it can come down, it can close right at the same 100%. Some call that a full bat version, but usually around an 886. Sometimes you have a wick down here, but the actual price will actually close somewhere up here, and then you'll have an 886. Here we go. An 886 retracement down, like right here. So there's your 2 points. And if you look at it from an M standpoint, it looks the opposite way. So you see one impulse leg, you'll take it from relative high to relative low, and you see the 50%. At the 50%, this is when you're going to start to pay attention, because now you're looking at where are we going to retrace, where's my C coming, and really the C is the safest way. Most people, the standard way to trade a harmonic is from its decompletion. You know, you trade from the retracement, it hit a 382 or a 61.8, and it either will be a trend continuation and bounce back up and break the high, or it will continue downward. And what happens with some people is that if your harmonic is not measured properly, or for some reason the market does something different, you could be messed up here. You didn't put a sell limit and whatever, you didn't want sold, and now it's still going bullish. You see what I'm saying? It has happened to me. So I had a couple of people let me know that the safest place to trade a harmonic is the C to the D, because you can't really go wrong with that. And once you break your B, it kind of is a confirmation that your harmonic is confirmed. So some people wait for the neckline, which is a conservative way of trading anything. You're waiting for necklines to break and then to retest, and then head on all the way up. As an aggressive trader, I usually kind of trade down here, because I'm looking for the market makers, the institutions, not to come back down here. Down here is where they have all your wicks. They're going to do a stop hunt before they make their move forward. I tend to come down in this area down here. I trade what some people call the second leg of the W. or the second leg of the M. So I would, once I come down into this area, I wait for my retracement. I'm looking for where it's going to stop, and then I'm looking for the retracement here. So again, you have, let me just put this out, a bat. Come on. My bat. So this is going to be what they call a bearish bat, because once it hits its D completion, it's going to reverse downward. So that's why it's called a bearish bat. So you have your X A equals your B leg. You understand? So whatever your impulse leg is, that is your X to A, which will give you your B retracement. Your B retracement should be a 382 to a 50%. I say 2, but it's either 382 or 50%. Your C leg can be a 382 to an 886. So at this point, really, let me just do it, and then your D leg will be 886. 886. I hate when I have this continue with this pencil on, because all of a sudden I just start copying everything all over the place. Do you have any questions so far?
No, I'm following.
Okay. So at this point here, from the B to C, I don't even really, some people measure it out. You don't even really need to measure it out. All you need to know is that they can't break the X, the A leg. So as long as it stops right here, or you can look at it and see, I'm good. I'm at a 786, 886, 50%. It don't even make a difference. When am I getting into the trade? And that's when I start looking at the candles. I do a candlestick analysis, because now I'm looking to get in the trade. Other than that, I can care less. But something else you need before you can actually take a trade from its decompletion, and it's called, I call it the full move, or the Fibonacci confluence factor. So you have your 886 here. Some people just go ahead and say, oh, 886, I'm going to put a sell limit. I'm going to set a sell limit, or I'm just going to take a sell as soon as price hits here. That's not necessarily true, because within its movements is a 127, a 1618, or some other Fibonacci levels that is in play. And the simple way that I have been taught to do it is, once I have my levels marked out, I just do an ABA extension. So I get my extension tool, here's my A, and I do it from Fibonacci to Fibonacci. I don't do it to wicks or candles, whatever. I do it from a Fibonacci level to a Fibonacci level. So even if there was a wick that was right around in the middle of the 50%, I'm going to put my fib at the 50%. So I'm going to do A, B, back down into A, and I'm looking for a 61.8, or either up to a 261.8, or even 224, but usually 61.8 is the zone that it creates, because sometimes the 61.8, it'll land right on the 886. They call that a Fibonacci cluster, which means that that level at that point is very, very strong. When I see that, then I'll go ahead and I'll put a sell limit just automatically. But if it's not touching, yeah, at the 886, my D point for a bearish bat is 886. So if it's not touching, I see my 161.8 is right here. I'll just draw a box at the 886 and then 161.8. Literally, okay. Make sure it touches, right?
Marie says, do you wait for confirmation of bullish movement on the D leg?
Well, you want bearish movement. You don't want bullish. You want bearish movement, because this is a bearish bat. So once the D leg has hit, the D point has hit, you're looking for, yes, to be conservative, right? You're looking for confirmation. So let's say a candle has come up. Let me change this color real quick. Let's say a candle has come up from here, and it has hit the D. Your next candle should show some type of rejection downward, which would give you indication that your harmonic pattern is correct. So like I said, the aggressive way of what I do sometimes is, instead of waiting for that confirmation, I'll put a sell limit at my 886, but I have different confluence factors that I may use, different things I've seen that it gives me some kind of indication. And see this green box right here, let me just take off this right here. This green box here is my price reversal zone. So I put it from the bottom one. This is my 161.8, and then I have my 886. Sometimes price will come down and stay up in here, and it could reverse from up in here, but usually I will wait until a wick or something hits this 886. So when I'm in the zone area, you'll see like a double top, and then it'll drop, things of that nature. You may see a bearish engulfing. That's your indication. Those are your candlestick analysis. Once I see a zone that's something like this, sometimes I still will put just a sell limit at the 886, because somewhere in here, but I'm waiting for price to hit each level. And that's something that Scott Carney speaks about. He's like, you're inside that box there, but usually price hits each level. Your 161.8, your 886. So I'm waiting for that to happen, especially if it's playing around in here and it hasn't hit my 886. I'm like, all right, I know you're coming up here sooner or later, and I'll put my sell limit at the 886. I will actually do it rest actually a little below it because of the spread, because I want to make sure that it gets triggered. Sometimes if you put your sell limit right at the 886, it won't get triggered because it hit the 886 and come down. But a sell limit means that it has to hit 886, go above it, and then come back down. So that's I've gotten caught a few times like that. So let's just took that. Did you get to see the what I wrote as far as the I send over into the chat? So what I'm looking for is double tops or double bottoms. So do I see any type of bat pattern? Can you see a bat pattern in this, what I'm looking at right now? Are you able to determine a bat pattern? I'm looking for a double top or a double bottom.
I think.
You think?
Over to the right,
The right?
the two lowest points.
Right here? Right here?
No, I was looking further to the
Oh,
right.
I'm sorry. I'm dyslexic, so I'm sorry about that.
No, you're fine.
I really am. You say the right, I go left all the time. So like right here?
Yeah, the next one, the next lowest point.
Right here?
Yep.
Okay, so. And
Yep.
so basically you're looking at this impulse leg and this one. Well, this would be your X, this would be your A. This definitely would be more than a 50% retracement. In fact, it breaks the A. So this would not be valid.
Okay.
Right? So let's see. Let me go ahead. And so basically, again, as I'm looking at the market, my eyes, because I can see it automatically, I automatically put this back on. I don't want it to look confusing. Let me take it off because it may look a little confusing. So I'm looking, let me see. Let me see if I can measure here. This is my high. So X, A, 61.8 now. And then again, you see that it's not anything's coming up according to those measurements. It could be another pattern, but we're not dealing with that right now. We're just dealing with the bat. And so pretty much I'm like, okay, I don't see the bat, I just take it off. And you just keep looking. And so when you're in the market, and if you're not in the market, and come on, what's going on here now? Let's go to the daily, see some more candles. There we go. There we go. Alright, this maybe looks a little better. There we go. Okay. I'm looking at an impulse leg. Up, down, up. It has not broken the A. I see. This is what I see. It actually triple top, but at the same time, this could be a possible bat pattern based off of this. You see it? This is nothing but a complex pullback. Within the move, you have the triple tops and things of that nature. You see it?
The first, the smaller yellow circle, that would be the X. The next point is your A. The going back up is the B, the C, and then the big yellow is the D.
So here we go. Look, so here's your X, that down here. Let me just mark it down for you. It's my X. It's my A. It's retraced down. Hit the 382. There's my B.
Yeah.
Yep. Right. That's my B, and then we can measure it out right now if you want, but I can tell this is probably maybe you can say 886. Uh-oh. So when you measure your C point, you do from A to B. You use your wick right here, and I go 786. See, 786, because it's a B point can be anywhere from a 382 to an 886. It has met its criteria. And also, my fibs, as you can see, I have everything on my fibs, my extensions and everything. But so now that's why I can actually draw it out once and see the whole thing. You see where my D is?
Yeah.
It's my C. And there's my D. This is a valid bat. And I'm going to show you my, like I said to you before, the Fibonacci confluence factor. So see right there.
So this would be a bullish bat, though.
This would be a bullish bat, exactly.
Oh.
There's my 2 points. You know, you can use it did a triple top, but there's my 2 points. What it really did, in essence, come on, is this right here. You see it all. This is one. They made it. This is actually one move, even though it did a triple top. And then it came down. And that's the thing. This is how they kind of, the market tried to trick you a little bit, because you're like, you know, oh, double top, boom. But see, this originally came down and hit a 382. So you've already met a criteria for a harmonic. Then it came up. It made it low, a lower high. So it came down again, but then it didn't break the B point, and it came back up, made another lower high, and then it broke the B point. So once you really break those B points, you can start to confirm that you're going into a harmonic pattern. Sometimes it's difficult to tell which harmonic pattern it is, because the 382 is the minimum requirement for all harmonic patterns. So you quite wouldn't really even know where this thing is going, where it's going to end at. And this is where you would use all your market structure situations. You have a break of the neckline, then it has come back up to retrace, where it has, here's your candlestick analysis right here. It's come back up to retrace. Here's your engulfing, and then you would take it all the way down at that point. So now let's look for my ABA extension to see if there was a zone that was created, or did we have a Fibonacci cluster. So A, B, back into A. Looking for a 161.8 or 224, and there we have it. And right within this zone is where price reversed.
Right. Okay. Yeah, that makes sense.
So when you have those kind of zone, and look inside the zone, what do you see? A double bottom. So price came down. It hit both. Fibonacci levels, my 224 and my 886. So let's say I had a sell limit right here. You know, technically, your stops will be below the X point, because remember, a bat cannot break the X. So you would put
buy limit.
Right. So you would put I mean, that stops my buy. I'm dyslexic, sorry about that. So I may say things backwards.
You're fine. You're fine.
So here goes my X. Here goes my X. You know, maybe 10, 15 pips below. You know, this is where you would put your stops. So your price, as you can see, has never come down in here. It created a double bottom. It came down, hit both. Bullish. Came back down again. Then right here we have the bullish engulfing. And this would have been the trade right here all the way. And then your take profits would be an A to D take profit. So you would take your Fibonacci from A down to D, and you're looking for 38.2 is the first take profit, and a 61.8, which is the second take profit, and it hit both. Now what you can do as well, since you understand candlestick analysis, you can just trade based off, stay in the trade based off of your candles. Price has come up, broke the neckline, as we can see. Now this is where structure and all that stuff comes into play. It has come up, broke the neckline, and has retested here. So at that point, we now can use this trend line as a means of staying in the trade. So we've come down, we have not broken the trend line. We hit the 382. We have risen again to 61.8. We have multiple reasons to stay in the trade. If you wanted to do that from a daily perspective, and if you stayed in the trade completely after the 382 and the 61.8, which you start the trade here, this is what 628 pips.
Sheesh.
Yeah.
I'm not that patient yet.
I mean, you could take you can compound your account. You take a separate account and you
Right.
just have it sitting there and so forth.
Yeah.
But yeah, so but if it was 61.8, that's still 378 pips at 38.2, 227 pips. And the thing about harmonics, the higher the time frame, the stronger your harmonics are. So you can pull out a harmonic on a 5 minute, and you can pull out on 1 hour. Of course, the 5 minute is not as much pips, and the 1 hour is definitely intraday trading. But of course, you gain the most pips from the higher the time frame. So I usually do my harmonics from a daily and a 4 hour perspective, which does require the patience. I've actually done one from a weekly perspective, and when that sucker hits, it's just like it just takes a lot of patience because you're waiting for the market to actually play out from that standpoint. 1 second, let me just.
So even with doing it off the, like, say daily and 4 hour, you still use your 30 pip stop loss rule?
Well, the higher the time frame, I actually use a little bit more depending on the actual pair, because let's look at this right here. This looks like this wick right here. This
Mm-hmm.
wick is actually okay. This is 34 pips. It was this cat chef. So sometimes on the higher the time frame, it depends on. I'll look at this wick right here. Okay, this is 70 pips. So the wicks itself, they usually are a bit more because the higher the time frame. This is 40 pips. So if I'm on like a daily or H4, like I said, I try to do a 30 pips. And depending on the pair, I try to do a max. I think I did a max of maybe 60 or 70, depending on the pair. Because some pairs that I trade that moves a lot, the ones that move a lot are very wicky because they're stop hunting. Because that's how you know that they get ready to make a move. They try to get everybody, they trying to clear the board so they can get, hold on a second. They can get everybody off the board so they can make the move. Because they're not trying to have anybody make money. So when I'm trading a pair that's quite wicky, I definitely would use a little bit more than 30 pips, or I would wait for the candlestick analysis, because before a move is made, there's usually a stop hunt that's involved. I think one of these methods, they call it like a turtle soup situation. Like here, this is what they call like a turtle soup. Like you have your stop hunt here, right? Then price will come up, and then I'll be looking for price to come below that area just a little bit before it rises again, and that's exactly what it does. It comes below here. This is a stop hunt right here. So this was the original stop hunt, and then of course most people put their stop losses right around here somewhere. They come down, hit it, and then they take off. And even though that looks like it's a small amount of pips from a daily perspective, it's over 100 pips. You got like 150 pips. So, and again, as you can see, you have a double bottom, and talking in harmonics, could that be a small bat? Yes, it is. Here's my 886. You see it? You see it? Andrea? Are we still on the line? Hello? Did we get disconnected? We got disconnected. Unbelievable. The heck? This is some nonsense right here. They didn't even give me a thing. Dang. That's some craziness right there. That's some craziness. I'm sorry about that. We got disconnected. Hello, hello. There we go. I'm just talking. I don't even know how long I've been talking to myself. Oh my goodness. Hello, there we go. I don't even know how long I was talking to myself. Is that something?
I'm sorry. I should have told you because I saw it when it said like 3 minutes, but I was paying attention to what you were writing.
Dang. That's horrible. That's horrible. But it's alright. I'm recording it anyway. Whoever listens to the recording, I'm like, what the heck is going on there? So I'm not for sure if what you saw up to.
We were talking about the stop loss. You were showing us the wick.
Okay, so from over in this perspective right here.
I can't see your screen.
Oh, sorry about that. Again.
That's okay. You are fine. Stop apologizing.
There we go. You see it now?
Yes, ma'am.
Okay, so we're talking about this particular stop point right here.
Yes.
Okay, yeah. So I was saying, and this is what I got up to was if you can look at this, you actually see a double bottom right here, right? And this is actually a back pattern as well. Measure it out. You see, because I have my double bottom and I have my D point, which does not break the X. So I have my X to A. X to A. My B point's at 50. My C point did not break the A. Actually, it's a higher low. And then my D is right at the 886. You see that? And then if I do an ABA, which would be A, B, A, number 1618 and my 886 is right here. Is my zone. And what do you see all within that zone? I'm going to take this off here. You see nothing but reversals. Reversal.
Oh, okay.
This is the zone. So here you have my 886, the top part. What did it do? It came up and wicked. So once I saw that, that's the stop punt. Again, that's the stop punt. Then you have this little doji indecision. Then you have my bearish engulfing. So this, from a candlestick analysis perspective, I would have gotten the trade here from a conservative place. And if you do an A to D, your 382 and 61.8 would be 382 was hit. 61.8 was hit as well. Actually, it came down even further because it's going into a Dow trend. But you see, you can do quick analysis. So just by looking at the double bottom and seeing that it didn't break the low, I'm able to see the back.
Yeah.
So then you see how you begin to see the market differently. You're looking at the impulses. Again, I see this. Let me just see. And you know, it may not even measure out properly, but you know, it's all about how I'm beginning to see. It's another double bottom, and then it drops. So what I would do with that one is, where are we? What is this? I measure up. It is hit at 786. Some people use the 618, whatever. I use the wicks in this tape, in this instance, in the instances, because price has come to this area, has hit at 786, has come down. It's not broken my A, and has come up to a 113, which it should have actually gone to a 127. So this would be something we call an invalid harmonic.
Okay.
You know, you see what I'm saying? Some people would say, well, here's 886 because there was a lot of indecision. But then again, not necessarily, because I haven't done my ABA. This all could be a zone that would validate my supposed bat pattern itself. Although I can't say it's a bat because my B is telling me it's 786, so it's supposed to be 127. But at the same time, from your regular structure, basic understanding of trading and so forth, harmonics really just gives you a directional kind of a bias. We already know from this standpoint here, that's how high price has not been able to come up to break it. So this is how you bring in all your other factors of trading. The harmonics give you a directional bias as far as like when you can get into a trade and get out of a trade and so forth and so on. So at this point here, price has not come to my 127. Let me just do my ABA real quick to see what's going on. I have my A, B, 786, A. Let me just see, my 127 should be ABA for a butterfly is a 161.8. That's usually the and my 161.8 is right here next to the butterfly, but price didn't come up in here, so it invalidated for some reason. Maybe news, the market does what it wants, so they're about, I would say, definitely more than 90% correct, the harmonic. But then you have situations like this where it does not complete, it just completely just starts turning around, and it broke the A, so we're definitely going into a downtrend. It's probably going to retrace back up and then come and drop further. So again, as you're looking at it from that perspective, they don't always complete where they should, where you think that they should. But then when you have the other factors, confluence factors of how to trade, you're still able to get in the market, because you would have saw this huge bearish engulfing and you would have said, oh, we're still supposed to go to 127. The sellers have entered the market at this point. They've entered. They're telling you, I've entered the market. The bulls are no longer in control, and you can see that by the wicks that the selling pressure has come in, and they've taken over the market, and they've started to break structure from that standpoint. So even here you have a double bottom, but because it breaks the high, that's going to show you that it's not a bat. It's probably going to be a crab. That's a different scenario. You have a W here. So these are going to be bearish bats, but of course, again, we've broken the high, so that's going to be a different harmonic pattern. And so you're looking for double tops, double bottoms, double tops, double bottoms. So from that perspective alone, what do I see from this point here? I have an impulse leg here. It comes up, comes down, does not break the low, and then comes up.
So right where you are, go back to that point where you at, that low point.
This one?
So right there, because that's the double bottom, you would start from that high point to the left?
Yes. This would be where I would start. So then I would just measure out X to A. We're coming to the 50. I would use the 50%, of course, because when you start seeing price just struggle around it, it's really just testing the actual resistance level, and it has not been able to fully break it. There's no real large candle that actually breaks it that shows that it's actually going to a 61.8 or above. So I use my 50, which gives me the alert to wait for this could be a bat pattern. It's come down, hasn't broken, and we have an 886. Let's do my ABA. A, B on the 50, A. There's my 1618. Now in a situation like this is something that I personally do, and because some people do use the wicks, I always put it on fib to fib, and then when I see there may be a little bit of room, like here's my 886, here's my 161.8. If I was to move this up a little bit, now where are we? Right there. The zone looks a little bit more cleaner, because inside here on the daily, inside here, this is nothing but a double top itself, if you go down to a lower time frame. So that right there makes a little bit more sense to me. Whereas right now it's just pretty much like a little bit of a stop punch. So these are just zones. So you can look at it from a standpoint of, yes, you have the 886 and 61.8, and usually once it hits those marks, it makes reversals. But then sometimes it goes a little bit above, but there's nothing really significant about that. So this could still be valid, and we say that because it has not broken the high. As long as it stays within the structure here and does not break the high, it's still considered a valid pattern. Some people put the B right here. I usually just stick with my fibs just to make it easy. And so the D point will always be at the 886. So some people at the end will put it up here. I always put mine just where it's supposed to be. It's supposed to be at the 886, and then have my zone. And at this point, you just kind of watch. after it has hit my 886, it did create some type of rejection. Let me just make it a little bigger. It did create some type of rejection here. And so you will get the indication, okay, boom, we're going down, but then it created a bullish engulfing. And here, like I said, if you go down to a lower time frame, it's probably let's go to a double top somewhere. Where are we? I don't even know where we were. Oh, I had to move it over. Let me just make this box here. It's gonna, wow. Let's see where we are. There we go. Okay. You see what it did? Came down, came up, come down. So there's your double top here. So that's what happened there. So again, you see from a daily perspective, you could jump down to a lower time frame and then trade it inside of there. Some people wait for it actually to play out within the daily structure. Again, that's patience. But that is how, that's the best way to look for a bat pattern. It's the double tops and the double bottoms. You're looking for your A point not to be broken, and you're looking for an 886 D point, a 38.2, or a 50% B point. Once you see that, the 38.2 or the 50, most likely it's going to be a 50. It's going to give you your heads up as far as what's going on here. And if it does not break the A point, it just makes a higher low. You can use your fib and you just start waiting for it to hit that 886. And that's when you can just say, okay, I'm not going to rush to get into the trade, because you may be in the middle of, it may be on its way up. It may have hit the B point, passed, it broke the B point, heading to 886, and you're like, oh man, I could have got in there. Just wait to hit the 886, and then watch, and you can take it down and still grab some pips. So this harmonics gives you, like I said, it gives you the directional bias. It's a way of correcting the market, and it also gives you an indication of where you can exit and where you can enter the trade. So, because sometimes once you know a method of trading, the biggest thing and the hardest thing is to find out, well, how do I get in? You know what I mean?
Yeah.
You know,
right.
Exactly. It's like, how do I get in this? And then it's like, well, where do I get out at? And so that's where the Fibonacci comes in at, because those are levels in which it's indication that the banks, the institutions, and the retail traders, they see those levels as well. And we're the ones who make the Fibonacci levels work, because we all do the same thing at those levels. So when you start hitting the 886, 786, and so forth, you know, people are starting to pull out, you know, whatever. So then you say, okay, it's time for me to pull out too. So again, let's see what this is. You see nothing? This is one big W here too, but it has broken a high. So it's going to be a different type of a pattern. But as you can see that, right? So that's all I do. I look at the market from that perspective. This when I look here, I don't see candlesticks, I don't see wicks, I don't see what's going on. You know, I don't even see what the trend is right away. I see one big W, and then I just measure. What is this? I say, oh man, we didn't broke the high. Let's just say all this that has dropped has not happened, but I see that we have just broken the high. That's a 113.
So you could even use that the lower high to the left, like not where you're at, but the one right before it.
Not this one. This one. Which one? This one.
No, go back over like where your B would be.
B. Right here.
Then the next one, the next high.
This one.
Could you
This one.
like say if you didn't, because none of the other stuff to the right had happened yet. Could you use that point?
Like right here.
Up.
Here. Here.
Over. To the right.
The right. My right. Your right. Right. This one. This one.
I'm sorry. Yeah,
This
right
one.
there, right where you are. Yeah.
Yeah, you could. You could say. You could say, well, what is this? Because you have a bottom that has come up, broke. You can, because there are different patterns anyway. So what you're looking for, this is one move. This is a move. This is a move. So this would be my B, the 50%, 161.8. So yeah, these are all move. All the moves could be forming harmonics. So choosing it's relative on where you choose your impulse leg. But
Okay.
understanding where, because once you start looking at the market as from an impulsive perspective, like this is really one move, one large move, but this is also a move as well. So it's like, well, where do I start? Well, and it's all relative. So in a sense, if something you started here and didn't make sense, you could just move your fib down here and like, okay, this makes more sense. Because you know how the market is. They're never gonna give you anything straightforward. They doing double tops and triple bottoms and inverted. You know what I'm saying? All kind of things that kind of throw you off. So you just begin to just move things around. You move your fibs around. No, okay, I start from the top. Something's really not making sense. Whatever. I just take it. Okay, well, I'm not gonna start from here. Well, let's use the next impulse leg. Okay, boom. This makes a little bit more sense. You know what I'm saying? So it's all relative, and those are the little dilemmas that you'll come across as you learn the harmonics. Well, where do I start the impulse leg? And then as you just continue on, you begin for your own self. Like, you know what? Okay, just keep it simple. This leg didn't really work, but inside the leg is another leg. So let me just use this point right here, because technically this leg came down and it retraced, and then it came down and broke this one. So this is a valid leg. Once you see what can I say, lows being broken or highs being broken, because it came down, right? Came down here and it came up and then it broke it. This actually is a valid impulsive leg. So impulsive legs are very much valid when they begin to break its highs or lows.
Okay.
So technically this is one leg, but then so is this. So you have a leg within a leg. So it becomes relative as to where you put your fibs at again to determine what's going on here in the market. All right. So that's, again, this is, like I said, how I see the market itself. As I'm going through this right now, I'm just seeing double bottoms, and then again, see, this is one leg, but this is also a leg as well. It broke a low. Make sense?
Yeah, I see it.
Yeah, makes sense.
Yep.
So then automatically I just start measuring out. Harmonics is nothing, and that's what makes it easy, because it's nothing but measurements. 886. There's your bat. Uh-oh, come on now. Hate this thing. Here's my bat. Hit a 50%. So I'm X to A. My B, you see that? 50%. Didn't break the low. 886. ABA. A. 50%. B. Back into A. 1618. And here's the zone. This zone is a little bit bigger, and sometimes you get bigger zones depending on how time frame. Here's my 886. So what I would have done, and I'd like to remove. Some people, they keep their fibs on and they take off, and I used to do it too, make it look nice and clean. I know that this is my 1618. It's my 886. I'm always gonna wait for both price to hit both places, right? And you see it comes inside. It doesn't hit my 886. I'm like, okay, it's doing something. Oh, it hit my 886, comes down, but comes back up. I'm waiting for a stop punt. And normally I would think, okay, it's going to drop, but then it comes back up. It does play around. And again, this is where the patience comes in at, because sometimes you're like, oh man, it must be wrong. It's playing around. Yeah, it's playing around. It's playing around because it's about to make its move on you. Here's your reversal pattern. And then because it's a 4-hour chart, you make it caught out there because you waiting for this thing to go. And you're like, maybe I should do this on the hour chart, but that's, we know how the market goes.
Yeah.
And here's my stop. I'm thinking, okay, here's my stop punt. You come back down, and I probably would have even caught some pips, but I probably would have missed this whole move here, and that would have been only because of impatience. That's what that is. That's all that is, because we've never broken the high. Even with all of that, it's still, come on now, what's going on with this thing? It's still, there we go. It's still below, it hasn't broken the high. So, really, that would be my fault if I missed this.
So your stop loss would be at the X?
Your stop loss from a standard perspective would be above the X.
Okay.
Maybe, I'll put like maybe a minimum 10 pips above the X. That's above the high. I wouldn't do 30 pips above the X. If I'm going to use the X,
Yeah.
because that's crazy amount of pips anyway. If I do above the X, I'm going to try to do like about 10 pips above the X, because it's probably going to be more than 30 pips anyway if I was to measure this out. No, actually, no, it's not. That's only 24. Yeah, I would do a 30 pip stop loss then, just to make sure.
Yeah.
And then I'll just wait and wait and wait and so forth. And I see my reversal pattern. It comes down, comes back up. Then made a lower high, and then we have the engulfing and it dropped off. So there's two ways. Like I said, I'm aggressive because I'm trying to get in where I know they're not going back to. So up here, I would have saw that if I been paying attention. And I'm like, okay, this is my stop hunt. I'm trying to get in somewhere up here. And even still, with the measurement, you can still use your Fibonacci's to measure out. We're looking for a downtrend. This came down here. I would bring this down. Went to the 113. I wouldn't have expected to go to 113. I would have expected the 886 again, because this really is a level where after price hits 886, it's pretty much going to be going where it's going. It's going to be heading down or heading up. You know what I mean?
Yeah.
Because the 786 is really the reversal of anything, but the 886 is usually where they stop hunt at, as which you can see, more of the stop hunt area. So there's your bat, your double bottom. I mean, I hope I'm explaining it as simple as possible. And
Yes, you did. This is great. Thank you.
I'm always worried about, how do I sound, and does it sound? I'm trying to make it look. I'm trying to explain the way I was taught and the way I see it. I'm trying to keep it real simple, because if you think that it's difficult, then it becomes difficult, and and I know that how it started for me. It's really just figuring about what the candles look like. It's really beginning to see the market in movement, and what I was taught, raw market movement. The market it just makes waves. The banks, the institutions, they move based off of these levels. And then of course you always throw in what we know, structure, and how to really. I've learned to draw out my support and resistance is because of the actual movements, the market movements. So when you have a zigzag zone, you can begin to see the bat without it. It's already drawn out for you. You see it? You see the actual M. Of course, the actual neckline would be right around here, but for me personally, the zigzag made it more easier for me not to be worrying about where is this, that, and the other. I just let it do its thing, and then I just start measuring from there, and I use its high points as my support and resistance. I think I will definitely put one here, just for chagrin's sake, and I move this one up like right there. You see, so it even helps you with where's your support and resistance levels. You see how it works? You see how it looks? Right? And so then you start to see, oh, there goes a double bottom. Oh, here goes a larger double bottom. Oh, there goes my double top. Here goes another double top. When you see a double top that's breaking the actual A point, X or A, they call that a crab. So instead of an 886, you get a 1618. And here's a little nugget with the crab, Andrea. A bat ends, the D point is what?
What do you mean?
The D point of a bat, the completion of a bat pattern. What's the D point?
886.
Right, 886. So if you come to an 886, and as you can see, price comes down here, and then all of a sudden it didn't keep coming down. It didn't retrace back up to a 382, but then it's dropped. That bat has failed. Now, what I learned from Scott was, instead of throwing out the pattern, it's continued downward. It's probably going to complete a different pattern, which is what they call a crab pattern. And the crab pattern, the D point, is a 1618. And what do you see? Price has come down to the 1618, and the crab looks like this.
Okay, I got it.
Alright, so let's just use something here, and there. So what happens is, once you begin to see points break that should not be broken, yeah, your pattern you drew out is invalid, but could it be forming a different pattern? Because it's about 7 or 8 patterns and so forth, and these are what they call extension patterns, because they've broken a low or they've broken a high and it has extended past your initial impulse leg, either your X or your A. In this case, it extended past the X. It broke it. But then again, the harmonic basically letting you know, well, okay, you broke it. Where are you going? What level? What's your level of resistance? Because we know that price travels from support to resistance, and they travel in what I was taught as train track. It's a train that's going from one station to the next. Never get on a train from the middle. You wait till it gets to a station. You wait till it gets to a level of resistance or support, and then you get on the train. So the harmonics gives you where is this train about to stop at? What's the train station? Train station is a 61.8. You got there, you got on the train. Here goes a nice entry because it's nothing but a wick. I would have put probably a buy limit somewhere around here. Of course, you always want to do an ABA. You want some kind of level of confluence. I don't even know what the B is. AB. I didn't really measure this out properly, to be honest with you. But right there, and then you would have ride the train. And where's it going to its next level of its next train station? You have a train station right here. It plays around in it, and it goes to the next one. Does that make sense?
Mm-hmm.
You think you'd be able to find a bat pattern on your own?
I think so.
Okay.
You know, M's and W's. You can't miss M's and W's.
You can't miss M's and W's. So
Going crazy.
we have a break again. So you see a W, but it broke its high. So again, extension pattern. Where are we going? What does that look like it's going? If it's not going to be a crab, what's it going to be probably?
A bat.
I mean, if it's not a bat, it's going to be a crab most likely, right? And here you see, here's a 618. It's a 618. Usually when your B is a 618, that's a Gartley pattern, which stops at a 786. It's extended all the way up. So I might automatically, right here, there's some kind of rejection. It didn't really follow through, and it start going back up. So your Gartley is invalid. So where are we going? Well, we should be going maybe to a 618. Doesn't quite make it there. So again, it's not 100%. It didn't touch 618. You can kind of say it's not valid because it didn't get close. Scott Carney says we get about 3% a range. This is nowhere near 3% for me. You know, this is kind of a distance, but you know it's up in that area. So you kind of got like an idea. Since you start hitting up in this zone area, look for some kind of reversal, and you see it came down and made a lower high, and so forth. So that's pretty much it for the pattern itself. But really, in order to really start getting most of the patterns and really learn the other patterns, it's really about training yourself to see the market from an impulsive standpoint, from its raw market movement, and seeing all the things that's happening within the actual raw movement. Even though this is one big W, you see an M as well. Right? And again, okay, you see an M, but you also see that it broke a high, and it comes down. So, you know, again, it's all about measurements. All about measurements. But I'm definitely going to have to end this call because I have another session I have to do on something completely different at 8 o'clock, and I need to prepare for that one.
Thank you so much.
You're very welcome. I hope that you guys got something out of it. I really do.
Thank you. This was very helpful.
If you have any questions or whatever, you know, if you start drawing patterns up, you know, just hit me up and let me know, hey, is this right? You know, am I missing something or whatever? And you know, I'm gladly willing to help out any way that I can.
Will do. Thank you so much.
You're very welcome. You enjoy the rest of the evening, okay?
Thank you. You too.
Okay. All right. Bye-bye.